A sole trader is a person who works on their own in performing a business. It can be more than one person. It could be, for example, husband and wife, or it might be two members of the family, but generally it is revolving around one person in a trade. The benefits of being a sole trader are you're in charge of your own business. You don't have a boss, nobody telling you what to do. However, as we'll discuss in a moment, there are some drawbacks. The disadvantage of being a sole trader is that if the business is not doing very well, then that's all down to you. So if you have sickness or absence or holiday absence, it directly affects your earnings ability. Many sole traders, once they start to grow the business, turn into what's called a limited company. And this way, the liability, should the business fail, is only limited to the amount of money they invest in the company. Whereas if they're a sole trader, in theory, if the business fails, they could lose their home, their car and everything. So the advantages are to be a limited company is you have what's called limited liability. The standard tax year for a freelancer would normally be from the 1st of April of one year to the 31st of March of the following year. The government tax year actually ends on the 5th of April. Don't ask me why, it goes back an awful long time. So I always advise freelancers, they should try and fix their year end close to the 31st of March. It doesn't have to be, it could be the end of any month, but customer practice says 31st of March is the most appropriate date. Not surprisingly, because I'm a qualified accountant, I urge my clients to produce their tax return as soon as possible. However, the latest date currently is if your year end is the 31st of March, you must submit it by 31st of January the following year. Even if a freelancer does a very small amount of income, I'm awfully sorry, you've still got to do a tax return. Even if you did a really small amount, you still must produce a tax return, and you must have what's called a self-assessment code. The key things that a freelancer should put on their invoice is obviously the client name, their name and address, a date, and some description of the goods they're trying to sell. VAT will look at separately, but assuming that the freelancer is not VAT registered, there's no need to mention VAT. And of course, most importantly, the amount of money you want to get paid and when you want to get paid. Does a freelancer need to charge VAT? Depends on the amount of business you're going to achieve. If your business turnover is below around £85,000, there is no need to charge VAT. But it's not quite as simple as that. If your income gets close to £85,000 any particular year, then you still have to register for VAT. And by the way, being registered for VAT isn't just bad news. If most of your clients are in fact VAT registered from yourself, it's actually good news to be VAT registered, because you can reclaim VAT on the items that you buy, camera equipment, computer equipment, etc. So don't always think that registering for VAT is a bad thing, because it could actually help your business. If you're starting up in business as a freelancer, you need to keep good records, and that doesn't always come naturally to a freelancer in my experience. However, you must keep receipts of everything you buy, you must keep invoices of every time you invoice a client, and you must have a bank account. Does the bank account have to be separate from your own personal one? No, it does not have to be. Initially, it's okay, but once the business is established, the recommendation is that you have a bank account dedicated purely to the transactions of your freelance trade. It's important, we're not trying to teach you how to do accounting, but there are three important categories you need to remember. One of them is income, and that's all the income you receive from your clients for all the work you do for them. Secondly, expenditure, and expenditure is all the items you incur, computer equipment, travelling, PC, anything like that, any cost you incur in doing the work. And finally, that's called expenditure, by the way, and finally, profit is the difference between your total income and your total expenditure is your profit, and it's your profit on which the tax will be paid.